చెప్పమ్మా. నేను ఊరికే నేను ఇన్ అబ్సెన్షియా అని చెప్పి నేను మెన్షన్ చేస్తాను. నువ్వు ఒకసారి అందరూ అని చెప్పేసాను. ఓకే.
చదువు
ये लगाओ तुम दे दो
రావాలి.
Good evening, sir. Chinmasan garu, good evening, sir.
Good evening, Adi. Good evening, Ravishar garu. Good evening to all.
Welcome, sir.
Thank you.
గుడ్ ఈవినింగ్ సార్. ప్రసన్న గారు ఒక్క 1 minute లో జాయిన్ అవుతానన్నారండి. సార్ రాగానే విల్ స్టార్ట్ ద సెషన్ సార్.
Good evening, sir. Chinmasan, sir.
Good evening, madam. Good evening. Chairman, sir, can we start?
అదే ఒక్కసారి మన ప్రసన్న గారు 1 minute లో జాయిన్ అవుతానన్నారండి.
Okay, it's okay. But I spoke with him. He's saying that he will start, he will join.
Okay.
So, no problem. Then he will start. Meanwhile, he will join. Because
Okay.
so many members are already logged in.
ఒక్క నిమిషం అండి.
Sir, Chairman garu, it seems
We'll start the things అండి. సతీష్ కొంచెం
Chairman garu.
చెప్పండి.
It seems CA Ganesh Prabhu sir has joined.
Okay.
You please find him and make him co-host, sir.
Yes, sir.
His
Join.
name?
Yeah,
Yes.
join.
Yeah, make him co-host, sir.
Okay. Thank you. And I'm about to start అండి. Madam, just 1 second. సార్ ఒక్కసారి ప్రసన్న గారు వచ్చారో లేదో అబ్జర్వ్ చేస్తుండండి సార్. రాగానే ఒక్కసారి చెప్పండి సార్.
Yeah, I will tell you. He has not yet joined, sir.
Not joined, Andy.
Yeah, Ganesh Prabhu sir has joined, sir.
Yeah. Okay. Ma'am, go ahead, ma'am, please.
Respected Chairman of Vijayawada Branch, CA Godavarti Srinivasarao, Chief Guest and Special Invitee, our beloved Central Council Member, CAD Prasanna Kumar, and Program Director of this course, Central Council Member, CAP Rajendra Kumar, and Regional Council Member and ex-officio of the branch, CAT Chinnamastan, and today's resource person, CA Ganesh Prabhu, and managing committee members, and galaxy of past chairmen, and fellow members of our fraternity across the country and abroad. Good evening to one and all. We take great pride to welcome you all for the 5 days virtual refresher course on practical aspects of GST, organized by GST and Indirect Taxes Committee, hosted by the Vijayawada branch of SIRC of ICAI. My hearty thanks to all the members for the splendid response in registering this course. Before moving forward, I request our chairman, Godavarti Srinivasarao, to give his welcome address.
So, good evening, ladies and gentlemen. Respected Central Council Member Rajendra Kumar sir, Chairman, Indirect Tax Committee, in absentia, sir is have an urgent meeting with the ministers at New Delhi, so he could not able to attend the today's session. He is going to attend tomorrow, and he is going to address us tomorrow morning. And regarding our guru, mentor, and guiding force, deemed member of our branch, Central Council Member Prasanna sir, and he is also going to join in within 1 minute. And our guide, ex-officio of our branch, Regional Council Member Chinnamastan sir, my colleagues in the MC, Purnachandra Rao garu, Shireen garu, Narendra garu, Ravi Kishore garu, Nagavalli garu, and Sunita ma'am, a galaxy of past chairmen of our branch, senior members of the profession, my dear professional friends across India. Good evening to one and all. Though it is belated, happy Diwali to one and all. So Pan India. Once we present that name that presents across the nation, it is in true sense that is reflecting in this seminar. Participation of 1400 delegates across India. Presence is a wonderful congregation of a professional community. Friends, thanks to the Central Council Member Rajendra Kumar sir for allotting such a wonderful virtual CPE meet to our branch and making us involving in knowledge dissemination to you all. His innovative thoughts shaping into seminars. One of such thoughts is today's refresher course on practical aspects of GST. In simple terms, it is back to basics. It is always said that network is now proves as our net worth. This lean period where very thin attendance of our clientele, staff, article students gives us a wonderful opportunity of learning and sharpening our tools. GST, as you all aware of that, day in, day out, there are going to be many changes in the grassroots level. To read and update needs a lot of patience. GST being a small kid, just a 3 years baby, just entering into LKG, like 3 years kids, it is showing a flying colors to us, really mind-boggling. Fundamentals are very crucial in this refresher course. We concentrate mainly on the funda, how to pass various journal entries. Not that we do not know all these things, but there should be a uniformity in doing the same, or we can call it as a SOP, standard operating practices. And we should not deviate from the same, as we are all still confusing in passing the entries like financial or tax debit notes or credit notes, and the reconciliations are playing a crucial role like MIS also. Friends, RK sir informed us back to basics is the only mantra. When I personally requested I personally requested all the resource person to give us the standard operating practices of all the topics. Friends, coming to the CABF, nobody knows about the future. We have to help our families by ourselves, even the extended families, that is our professional brothers and sisters. Please be a life member immediately by paying rupees 10,000 or rupees 1,000 rupees. Be a member by paying rupees 1,000 rupees, or I request you to pay whatever the things that is possible to you. our Central Council member, who is very close to President Sir, who knows his heart, and he is striving to bring transparency in each and every area, like CABF of revenue, to throw some light on this very important present day burning issue of supporting the mankind. But this is also to intimate that our flagship event of SIRC Regional Conference SIGRAM is going to be conducted virtually from December 10th onwards. Our RCM and ex officio of our branch will explain you in detail about things. Now I request our mentor and CA Chinnamastan sir to give his brief message. Thank you, sir. Over to Chinnamastan sir.
Thank you, Chairman. I hope my voice is clear.
Perfect, sir.
Right, thank you. Respected Chief Guest of the session and the Central Council member from Visakhapatnam, Andhra Pradesh, CA Prasanna Kumar Garu, and the Program Director, our Central Council member, CA Rajendra Kumar, who is also happened to be Chairman of GST and Indirect Tax Committee of ICA in absence of due to ICA activities. The vibrant Chairman of the South of Vijayawada branch, Srinivasarao Garu, Secretary Srita Sharan, and Vice Chairman Purnachandra Rao, Treasurer Narendra Babu, and Sikasa Chairman Ravi Kishore Garu, and past Chairperson, immediate past Chairperson Nagavalli Garu, MC Member Sunita Garu, and past Chairman and MC members of Vijayawada branch, and Speaker the Ganesh Prabhu, and other senior members of the profession, and my dear members present here as virtual program. Good evening, and good evening to one and all. I heartily welcome to you all for this refresh course on practical aspects of GST, organized by GST and Indirect Tax Committee hosted by Vijayawada branch of SRC of ICA, with the objective of equipping our members in practical side of GST in terms of accounting, compliance, and representation before the adjudicating authority level and the appellate level. Dear members, first of all, for any program, we shall start conveying our best wishes for the program, but I can confidently tell that in this particular program, we shall say congratulations rather than saying the all the best. Because going by the number of registration, around 1400 plus from across India, I know that this program would be a successful in terms of registration, but looking at the numbers, it's just amazing. For any, like a small branch is Vijayawada. I can say one thing at this point of time, that Vijayawada branch has earned its high credibility not only in the south, amazingly even the other places of entire India. This is purely because of the team of Vijayawada, led by Srinivasarao, and the collectiveness of MC members, and especially the other members of Vijayawada, who always thinks about this best we can serve to the members. And I am so happy that even I was made as a part of this success, being as an ex officio of this branch. The branch conducted several programs like the course on IBC, Valuation, Companies Act, and many more, and especially this time as GST. For this, I need to thank the Rajendra Kumar sir, Chairman of GST and Indirect Tax Committee of ICA, for giving this wonderful opportunity, especially to the Vijayawada branch. Coming to the program, I can say it is a full-fledged lavish food. Care is taken by all, including the relevant usable topics in the GST in law, and now it is ready for serving for the 5 days. So I believe this program, which turned for 5 days by eminent faculty, would definitely allow members to concentrate on the subject in detailed way and help them to deliver the service to the clients in the best and efficient manner. I request every member utilize these sessions without switch up the video so that it will reach effectively to the every members. I once again appeal to the fraternity. A small virus is taking control of the human action in these days. I request every member and family to take all preventive actions, right from the food habits to the hygienic measure at home and the workplaces. Dear members, I want to tell that in every program, I'm sure every member might have secured himself or herself, including their family members financially. But still, I request everyone to ensure we have the medical insurance and the term insurance policy for all for your sufficient sum assured. Even I again request to the members, especially to the practicing members, to take care of the article assistants and the paid assistants about their medical insurance as a matter of courtesy. If you not follow this courtesy or the principles, tomorrow that will be a burden to our office. So for your information, I want to share, ICA got the so many MOUs with the different insurance companies, which will give that as a very nominal fee, especially these COVID times. So I request every practice members that cover that full insurance, the risk with the insurance in the office as well as the family and the house. Finally, as expressed the chairman in the welcome address, SARC of ICA organizing 52nd regional conference on December 10th, 11th, 12th, 13th with highly useful topics on a virtual mode. Please register with that conference. I request all the members across the South and other parts register for these programs. It's this is the first time online program as a regional conference. All the best for everyone for it. And Jai Hind, Jai ICA. Thank you one and all.
Thank you, sir. Thank you very much for the wonderful welcome address. And now I request Shrita Shireen ma'am to kindly introduce our chief guest and special invitee of the day, Prasanna Kumar sir.
Shireen, very short introduction.
Very short, sweet and short. Yes, sir.
At least allowed me to do.
Very short.
It's a great pleasure for me to introduce our beloved Central Council member, C.A.D. Prasanna Kumar sir. In fact, no need to introduce him, but as a formality, let me do this. He has been occupying several positions in the affairs of Institute at Sikasa branch and regional level. He occupied all the positions in the Visakhapatnam branch during his chairmanship. In the Visakhapatnam branch, received the Best Branch Award for the first time. During his chairmanship, SARC received Commendable Performance Certificate at all India level. He is presently holding the position of Central Council member of ICA and also playing role as chairman and member of more than 17 committees of ICA. He spoke and presented papers on bank audit, company law, professional ethics, union budget, etc. in seminars organized by various branches of ICA. He is a keen follower of sports. Sir has trained in many sports and is also a volleyball player. And he held numerous positions in the sports held in various institutions. With this brief intro, I request Prasanna sir to give his valuable message to our members.
Thank you. Chairman, I'm audible now?
Yeah, please, sir. Thank you.
Fine. Respected CA G. Srinivasrao, the chairman of Vijayawada branch of SARC of ICA, CA Channamastan, the regional council member, past secretary of SARC, CA Shita Shirin, the secretary of Vijayawada branch, CA Netta Ravi Kishore, Sikasa chairman and the person who gives the technical support for all the meetings held by Vijayawada branch, and my dearest participants in the program and other committee members of Vijayawada branch. So good evening to all of you. It is also my proud privilege. I may be called as a special, addressing especially, but still I'm a part of the organization here. I was a part of the Vijayawada branch and Vijayawada branch committee, though technically no. Still, I too welcome you for the refresher course, which is organized by hosted by Vijayawada branch and organized by the Committee for Indirect Tax and GST. Friends, is a very great program which has been conceived by the Vijayawada branch yet another cap in the feather of the yet another feather in the cap of Vijayawada branch for organizing a variety of topics and a variety of the almost all the subjects which are relevant to chartered accounting in practice. Friends, as you know, GST committee has been doing a lot of service not only to the members and also hand-holding with the government of India, particularly GST Council, in the day-to-day developments that are happening in the GST Council with respect to GST implementation and post-implementation also, in the administrative matters also. As you know, ICI is a knowledge portal in the GST success. That is the reason why the Institute of Chartered of India has been felicitated by the government of India for in recognition of the greatest services that were rendered, not only through the members of the institute, but also guiding the entire commerce industry, so that the GST has been implemented perfectly in a shorter span of time. Though there are certain hiccups, but still, by and large, it has been a very successful implementation, hand-holding with all the states in the federal setup that we have in the country. It has been a great success. So GST committee gives regular suggestions to the GST Council on day-to-day matters, and whenever a new thing is coming, in the drafting from the drafting itself, and envisaging how it should be implemented, how the entire thing should be done, is done by the guidance is given by the GST Council, GST committee. There are many certificate courses which has been organized by the GST committee. So where more than 18 batches have organized recently, but thereby 8,200 members have benefited out of this one, these courses. It has disseminated knowledge by conducting various programs and a variety of programs, conferences, seminars, workshops, webinars, and certificate course on e-learning and skill development programs. As you know, this is the GST committee, the only committee which has released 19 technical publications GST. 19 technical, in a short span of time during the Corona time, making use of the spare time available, it has been released. In fact, after releasing this one, it was GST Council itself has recognized and appreciated the efforts put in by GST committee in getting those 17 handbooks. And they have in fact suggested that the offices of the GST, be it state or central GST, they should also have these books, so that it is a great guidance for them in the implementation of the law. Friends, ICA GST newsletter is there. Hitherto we used to come up with a publication with the physical form. Now in the electronic form, a GST newsletter is coming. It's a very good document. We may be going through many other documents. This is a very good journal which is coming, released by GST committee. Whatever has happened from the previous release to the present release, everything has been lucidly explained in this particular GST newsletter. Friends, in fact, the recently e-invoicing was introduced. You are aware under GST. Even e-invoicing with the drafting stage itself, it was the GST committee which has had series of meetings for introduction of e-invoicing. Though it is made, effective for aggregate turnover of more than 500 crores, soon it is going to be 100 crores is going to be the threshold limit. I feel down the line, it may be the intention, it may be made, applicable to all the classes of assessors under GST. So, and even startup CA Institute services have been so much recognized. Even the grievances committees, whatever has been constituted at the state level and central level also, a chartered account GST committee has nominated chartered account nominees on all the states. That is the importance which is given to GST committee. And we are not only training, GST committee is not only training their members and also imparting knowledge for the trade and commerce, but also we are giving training to GST officers, both the state and central level, for the Implementation Act. Gone are the days when we used to depend on somebody for the indirect taxes consultation, but today it is everyone looks at chartered accountant to give the guidance. Not only the trade and industry, but also the GST officials. That is the way we have been equipped and enriched with the knowledge required. We are enriched with the skills required for practicing GST. The friends, as you know, lot of things GST has become dynamically changing. So we know at least the major changes in direct tax, in the income tax, particularly direct taxes, they used to happen only in the budget time. And later on, 1 or 2 notifications, some amendment used to take place. Nothing beyond that. But as for GST concerned, almost every month there's a new development. It's a dynamically evolving subject. So thereby there's a new things who have to be up to date. That is the reason why you are having so many frequent meetings as far as the GST is concerned. And the due dates for annual return reconciliation statement has been extended. All of us are aware. And recently, the e-invoicing also, as I told you, has been implemented very recently. And the upward publication of e-invoice GSTR1 is also now enabled. Earlier there was some hiccup was there. Now it is enabled also. The central government has notified due dates for GSTR1 and with effect of 1st January 2021, as you know, 11th day of the following month and 15th day of the following month, as the case may be. So HSN votes has been made compulsory now for GSTR1, and there's a new concept which has been introduced. That is known as QRMP, the quarterly return and monthly payment. You can make the payment due, the GST due, the payment can be made monthly, and quarterly you can file a return. There is a lot of the QRMP scheme is also very good scheme, and Institute, the GST committee has also contributed there. So these are the dynamically which are happening. I'm sure with this background scenario, the refresher course on practical aspects of practicing GST is a very important one. And the GST, the very good speakers have been chosen by the committee. And Vijayawada branch has also organized so neatly the timings, everything, daily 2 hours from 6 p.m. to 8 p.m. And the excellent speakers and the structure of the program so well. I'm sure all of you are going to get a lot of benefit out of that one. The way in which you enrolled, there are more than 1,200 participants in this program, and some are enrolling even now. In a couple of minutes back, also enrollment is still going on. The way I think we are going to touch the outside threshold limit of 1,500. That shows the thirst for knowledge of the chartered accountants. Each day in and day out, we keep longing for learning, enriching our knowledge, so the best possible service is given to our clients. So that is the reason why whenever we recall the Government of India recognition to GST committee, the ICA, in implementation of GST there, we feel proud, we feel elated, we feel that we are sincerely a part of the national building. So with these few things, I wish you all the best. And the opening batsman is very important. And the opening batsman, we say Ganesh Prabhu, a renowned speaker, and he is starting the entire session, the series of sessions for 5 days. I'm sure the next 5 days is going to be feast of knowledge. I don't think any of you are going to be absent. Even in spite of a client coming and waiting in your office, I think you are going to attend this particular 5 days program and enrich your knowledge for a better service to our clients. So friends, with this, I thank Vijayawada branch for giving me an opportunity to just share a few thoughts. I'm not a GST expert. My domain is different, but little things I learned from my partners, and I spoke to you whatever I knew about that one, the GST. The friends, I'll just come to MEF. There are many calls have been coming that the income tax return form for multi-purpose empowerment form, those who are not submitted, furnished the full income tax return form in a PDF form. If they are not submitted, the date was given up to date. It's not a problem, but there are some hiccups there, some technical problems were there. All those things are getting resolved. To the last minute, it is in the interest of the professional development committee to see that even the last person who submits that particular form should be empaneled for multi-purpose empowerment should be done, particularly the bank branch audit purposes. So we are with the members. The committee is there only for service to the members and to handhold with the Reserve Bank of India for finalizing the panel. So don't be panicky. Even those who could not submitted, so are coming up with the entire technical glitches are being sorted out. So you'll be given opportunity. And as chairman said, Chartered Account Benevolent Fund is a great fund. He has already explained something. I'll just add for one is for 30 seconds. See, wherever you want a benefit out of any fund that's created, out of any insurance company that is created, you should be part of that one. You should contribute your money. Then only you're entitled for the benefits. Unless any group insurance, anything that you contribute, you enroll, otherwise you will not get it. The only fund, as far as my knowledge goes, in the entire country, maybe in the world, where to get the benefit, you need not be a member of the Chartered Account Benevolent Fund at all. You shouldn't have enrolled as a member. You shouldn't have contributed a single rupee for that one. But still, as long as you're a chartered accountant, whenever the family, we pray God that none of us should go for Chartered Account Benevolent Fund. Only it's meant for bereaved families. So if you are a chartered accountant, one person is chartered accountant, so certainly he is entitled for the benefit. That is a special scheme. It is for the benefit of chartered accountants. And we don't borrow, we don't solicit any contribution from others. Even if somebody is interested in contribute 10 crores of rupees for chartered benefit, we don't take it. It should be contributed only by chartered accountant for the benefit of our chartered accountant brethren only. That is the greatness of this fund. That is the reason why Vijayawada branch chairman has taken it as a special trust area, so that he wants to see maximize the contribution to Chartered Account Benevolent Fund. Even in the recent pandemic of COVID-19 also, there are a number of chartered accountants. Our income has come down. COVID has taught us certain good things. At the same time, it is hit everyone's pocket now. So all of us are affected financially. So under these circumstances, to one person, any patient who is admitted out of COVID-19 hospital, he has to pay a few lakhs of rupees, ranging from 5 to 15 lakhs of rupees. That is the way that has been charged. It has hit on almost everyone's pocket. Without insurance, we could not survive. That is the reason why there's a number of hundreds of applications have been received. Those who are affected for 1,50,000 rupees grant that we are giving from CABF. So that is the state of affairs. Under these circumstances, please realize we are doing some service for our own self. It's not that we don't need it tomorrow. There may be a situation that we too need that one. So let us contribute liberally for this global cause. Those who have not become the members, please become a member. Those who have become the members, try to contribute liberally from whenever you have for your birthday, any day, you please contribute. It's for our family, our child of fraternity. With this appeal, I thank once again for all of you, because I've taken 10 minutes of your time. Now it's 6:15. It's time for Ganesh Prabhu to join. So let's all listen to him, the opening batsman of the series today. So with this thing, I thank once again, wish you all the best. Have a great learning. Thank you. Thank you very much.
Thank you, sir. Thank you very much for the wonderful message. Though it is not your domain, you taught a lot of things about the GST and all these things. So without wasting much of your time, I request Shrita Shirin ma'am to introduce today's resource person, Ganesh Prabhu sir, to you all. Thank you. Over to Shrita Shirin ma'am.
I'm glad to introduce our today's resource person, CA Ganesh Prabhu sir. And regarding his educational background, he is Bachelor of Commerce from University of Madras, and he is Master in Financial Management from Pondicherry University, and he is a Chartered Accountant from ICAI and Bachelor of Law from Karnataka State Law University, and he did ISA audit from ICAI and certification course on indirect taxes. And he is the partner in C. Ramaswamy and D. Srinivasan Chartered Accountants, Chennai, Tamil Nadu. And as a partner, he specialized in indirect taxes for more than a decade and heading the GST and indirect taxation in compliance, advisory, and litigation vertical practice. As a counsel, he has represented clients in various cases before Customs, Excise, Service Tax Appellate Tribunal, and also Sales Tax Appellate Tribunal, and before commissioners and other adjudicating authorities of GST and indirect taxes. He was involved in GST implementation of various organizations and advised the clients across verticals such as manufacturing, construction, entertainment, real estate, retail trade, automobile, education institutions, charitable and religious institutions, hospitality, industry, EPC contracts, information technology, and business consulting, etc. As a faculty member, his role. As a faculty member, he has extensively toured to several parts of South India to give guest lectures to members and finance professionals and also students in GST during the days prior to implementation of GST. Being the master trainer of GST, affiliated by the ICAI, he had more than 350 presentations and trained more than 10,000 professionals and 25,000 students and other members in GST at various seminars and workshops and conferences conducted by the organizations such as CII, FICCI, MMA, KMA, AA, FTP, and other associations. And he is a member of GST study group of ICAI and contributed in development of background material on GST law and handbook on annual return and technical guide on GST audit developed by GST and Indirect Tax Committee of ICAI. He presented papers in GST and indirect taxation of SARC of ICAI and branches of SARC of ICAI and SARC CPA study circles and other various organizations. And he is a resource person in ICT Academy, an initiative of Government of India and other states. And he is a visiting faculty in Lilo College of Business Administration and all 3 professional certificate courses institutes such as ICAI, ICWA, ICSA, and handled classes for professional students in the subject indirect taxes laws, which include GST, customs, and FTP. And he is a member of Governing Council and was the immediate Vice President of International Chamber of Indirect Tax Professionals, an association dedicated exclusively on indirect tax. He regularly writes articles in reputed financial dailies and magazines and participated in various shows and debates in television. With this brief intro, I request today's speaker, CA Ganesh Prabhu sir, to present on the topic, Accounting, Ledger Maintenance, and Proper Documentation in GST. Thank you.
Thank you, sir. Thank you. Its floor is yours, sir. And as you all aware that I already 856 participants are saying that if you want to address the same, it should be a more than 20,000 SFT hall that should be there. And mind you, there are so many, more than 65 participants that are following in the YouTube and it is on the relay publicly. Thank you, and over to you for your great presence. Thank you.
Thank you. Good evening to one and all present here. Chairman of Vijayawada branch, Srinivasa Rao Garu. The chief guest for the day, our CCM, beloved CCM Prasanna Kumar sir, RCM Chinnamastan sir, secretary, past presidents, learned senior members in the profession, and all the 1,000+ participants virtually present. A very warm welcome today. Always it has been a pleasing moments to be part of various initiatives of indirect taxes and GST committee. And this time when they have been asked me and gave a topic like this, what am I going to speak, was the only question that is revolving in my mind over the last maybe 2-3 days. And somehow I freezed up and went back, touched up my original books when the whole GST law came back. What were the initial workings? I still then recovered one of my Excel sheet where it contained 256 journal entries. On the other occasions, 2 days before, the chairman was more particular. Sir, if in case possible, can you share some of the journal entries that need to be passed? We will share with people who are all need to follow all this. A collective understanding of all this brought in to a small presentation mode, where I would share my presentation, a very simple presentation. As we discussed, predominantly majority of the aspects are already known to us, nothing new about it, but there are certain areas that we need to concentrate. 3 years have been done with GST. A lot of learnings. Mark my word, as it been told, a lot of learnings. As simple as that, how the accounts of an organization can be shaped and how the data can be more well synced with the current GST accounting practices. All this were always a thought process associated with it. The whole discussion has covered in this slots, where initially we will discuss something about the introduction as just basic introductory aspects, followed by we will also touch upon certain type of transaction and accounting of those transactions, what is required and what are those aspects that need to be taken care associated with it, followed by GST ledgers which need to be maintained, how it has to be maintained irrespective of the ERPs and accounting package that are being maintained. If it is being like this, in case if the ledgers are, in case if the books are maintained in a decentralized mode, how it has to be maintained. If it is made in a centralized mode, how it has to be maintained, followed up by accounting of few transactions relating to purchase sale of capital goods, or it is going to be all those inter-unit transfer and cross-charge related matters, or as usual, the challenging entries, debit note, credit note, input service distributor, TDS and TCS under GST. No doubt, enough TDS we have TDS under income tax, we have TDS under GST. Good. The government wants a trial need to be left in the system, and for all those purposes, all this is being initiated. Is GST accounting or accounting of GST, is it really mandated? Yes. There need a proper and a correct reconciliation which is being required. Many times we come across the books and the GST ledgers, more preferably when I refer a GST ledger, in the GST common portal, I'm sure all of us are aware, there are 3 different important ledger: an electronic liability ledger, electronic credit ledger, electronic cash ledger. These ledgers and the books of accounts should be in tandem at any point in time. Though it is very easy to say and come out relating to all these aspects, giving effect for various accounting transactions that are going to be different in nature. How this is going to happen, how it is to be made happen, is it possible? Yes, I have come across a few organizations, a handful of organizations who are very meticulous. My electronic liability register in the books of accounts maintained by me is a mirror image of what is maintained in the GST portal. Organizations were so strict that don't kindly bring in reconciliations. At any point in time, it should tally, because it is the need, and for a better improved compliances and for various checks and balances, preferably in case of multi-GSTN operations, where an organization have 5 state registration, or an organization within a state have 2-3 registration, because it is warranted for them to have 2 or 3 registrations. In those circumstances, maintaining or opting the accountability or GST accounting in a particular modality gives certain aspects associated with it. At any point in time, no doubt, the GST records and the books of accounts should be synchronized. Without a reconciliation, all of us over here are really happy. At least with the reconciliation, it should match. The downside today are, preferably if goods comes in lots, in case of some credits of this year claimed in subsequent year, accounting for it all are always done on an individual perspective than going or opting in a particular model. No doubt, thanks to e-invoicing, as very rightly pointed out by our CCM, it's an initial step of the government to ask and bring the 500 crore organizations above alone to the e-invoicing modality. No doubt, very soon it is going to get implemented for 100 crores. Post that, maybe in few months, that would be the order of the day. I can share only 2-3 takeaways of e-invoicing. I'm not saying that e-invoicing is easy, all that and all. Everything comes, every transaction are challenging. All transaction lead to growth. If that be the principle, coming back here, getting into this e-invoicing, the amount of time for generation of e-label, the way in which the GSTR1, the outward supply statement, is data is going to get pre-filled. Those are all amazing. And with the new modality is approachable on the returns, which is going to be effective from January 2021, where automatically data will be moved from GSTR1 to GSTR3B, and on the other end, from the GSTR2A or 2B to the GSTR3B. Those are all going to be the days in which maintaining a good accounting system, preferably for GST, is going to be important. Coming back here, getting more specifically into the discussions on GST accounting, there are lot of transactions. That transactions can be broadly classified into, in GST, accountability of outward supply, again accountability of inward supply, and the third limb, inward supplies on which tax is payable under RCM. All these aspects are always important. Now, why that is becoming important, or why this is going to be so much important for all these organizations? When questions like this, or basic questions like this used to come, all that is being recommended, or all that is always been recommended, is outward supply. Outward supply under GST can be broadly categorized into a supply on which tax is payable, similarly a supply on which tax is not payable, and again further, a supply on which tax is payable will have differential rate of tax. Today, thanks to some of the accounting packages which takes care of this different rate of tax automatically. But still there are SME organizations where, in those circumstances, those SME organizations on these aspects, the SME organizations are finding it difficult to maintain or opt or stick to some of these accounting packages and pass through entries. So from those organizations' perspective, how they have to maintain their ledgers. Similarly, there are also going to be transactions where tax is not payable may also be dealt upon by the suppliers. If they are going to deal in those supplies on which tax is not payable, a clear basic demarcation between the taxable supplies and a supply on which tax is not payable at a prima facie level is required. And many organizations are grouping their ledgers in different way. Maybe there a structuring may be brought in, and those structuring would be broadly based from a GST perspective, if it is possible, as tax payable and tax not payable. Because I can do a zero rated supply with payment of tax, I can also do a zero rated supply without payment of tax, and there are organizations who opt all these different types of supply. So many times, though, the solutions can be broad based and can be discussed from a broader perspective, individual organization has to sit and decide upon the respective applicability of them. Similarly, when it comes to services, no doubt for the goods, on all those advances received at the time of receipt of advance, they are exempted from payment of GST. However, when it comes to services, on all those advances received, yes, they are liable to pay GST. And the accounting of advance received and the adjustment of advance received both creates its importance. Now, what are the probable ledgers that can be created and what can be maintained, how it can be maintained? When it comes to that discussion, if the accounting package permits for them to have an internalization of nature of supply and rate-wise outward supply, and at any point in time that data can be extracted, then it is ideal to maintain it under a single ledger. Let me repeat. There are accounting packages where it allows the organization to internalize the rate and the nature of supply, be it intra or inter, followed by the respective various rate of tax. And again, the criterion to be decided whether for a GSTN the books are going to be maintained, or for all those GSTNs, various GSTN books are going to be maintained. Now, when it comes to the GSTN related aspects, how this GST has to be maintained, how the books are to be maintained, organization should have a very clear clarity. Why I'm highlighting this? Because in a centralized accounting, no doubt it comes up with a lot of advantages, but the if the accounting package is not strong, then the implementation of it comes up with certain challenges. One of the very recent challenge that we have come across was, instead of obtaining credit at Chhattisgarh, the organization has claimed credit in Vizag, and actually bill belongs to Chhattisgarh. Credit is taken in Chhattisgarh, bill relates to Vizag. Accounting, posting related transaction, how to overcome it? The ledger should be coined in that way in the accounting packages that it is little visible for them to manage in that way. Followed by, once every tax period is over, as I earlier initiated in the discussion, the three ledgers, electronic liability register, electronic credit ledger, electronic cash ledger should form part of the books of accounts of the organization. Many times, my experience, let me repeat, I'll be honest here, my experiences of viewing, preferably the SME segment of our country, is input, output under same ledger, or output will be in one ledger, input will be in one ledger, no adjustments happens on month basis, the GST paid through cash will be in a separate ledger. I think the current model of GST does not functions in this way. Absolutely does not function in this way. That too after implementation of rule 36(4), where after receipt of the entry into the 2A, I would be entitled to claim credit. I am not stepping into the question of legality associated with it. Accepting at that level and getting into the compliance and accounting, the ledgers, be it electronic liability register, electronic credit ledger, electronic cash ledger, should be form part of the books of accounts. Now, coming back over here, relating to, having said it has to be maintained, it has to be maintained in this way. A separate set of ledgers should be maintained for exempted goods, exempted services. Again, in exempted goods, if the organization deal in variety of exempted goods, it is ideal that in the respective head ledgers are maintained. And in case of services, why I'm highlighting is, an organization might be dealing in few types of services. Maybe in that exempted services itself, it would be exempted under 3 or 4 different heads. It would be better for the organization to have a respective or a specific exempted supply. At this juncture, I would also highlight, still today, many organizations, many people yet to realize one fact, that interest income is an exempted supply. Now, why I want to pick up here is interest income. Yes, it is an exempted supply. No doubt, it is a return off. It has to be parked separately. If it is a dividend income, it has to be parked separately. If it is going to be a profit on sale of asset, it has to be parked separately. Maybe a clear distinction need to be drawn between GST exempted related ledgers, GST taxable related ledgers, and the other ledgers, so that a clear, broader thought, big picture is available. If certain SOPs in the organizations are drawn in that way, yes, it would help. Now, in case if you ask me how those organization has to maintain, it is a small suggestion or the recommendation at our end. At an organization level, if they have only one GST, if they are having accounting only for one GSTN, maybe their outward supply should have the following ledgers. Let me repeat: output IGST for that state at 5%. Yet another separate ledger. Let me repeat: another ledger, output IGST for 12%. And the third one and the fourth one, similarly for CGST, similarly for SGST. And let me repeat it. Instantly, some of us can ask why I should have like this. Either the rate of tax should be automated in the accounting package, so that the correctness or the control associated with the valuation is taken care by the accounting package. No, that is not possible. Automation or automatic invoice numbering or automation of invoices is not possible for this. Then this separate ledger is warranted. I even discourage a practice of having output IGST, where 5% rate will also come, 12% rate will also come, where 18 and 28 will also come. Tomorrow there will be real challenges, real challenges will be over there. Why we want to highlight over here is, similarly for the intra-state supply, a separate 4 ledgers. and intrastate supply, separate 4 ledgers for CGST, again SGST. The TN refers their respective state. If an organization have a multi-state operation and they have a centralized accounting, possibilities are there. A separate set of ledgers for TN, a separate set of ledgers for AP. A separate ledgers need to be maintained by the respective organization. Now, again, on this model, wherever required, necessary entries. Let me repeat, I am not insisting that all these ledgers has to be created. If the organization deal only at 1 or 2 rate of tax, then it can stop creating at that level. In case if they have a multiple, they deal in complete rate of tax, let me repeat it, these ledgers opening becomes mandatory, or let me repeat it, the task of accuracy for the respective rate of tax should be given to the accounting package. If the accounting package takes care of the rate of tax, that is to say, if we fix the taxable value and the rate of tax, automatically the GST is calculated by the accounting package. On that case, I would completely agree with all of us. If we have one single ledger, it would be sufficient. However, for data extraction from a specialized report or a special report from the respective accounting package, I would be entitled to claim, because on a single invoice, I will also have 5% GST, 12% GST, 18% GST, and 28% GST. Exceptionally possible. At least 2 or 3 combination in those circumstances. Plus, some of us or some of the organization has a practice of adding certain or collecting certain charges separately, maybe for the purpose of other purposes such as delivery, transportation, or n number. For all these, along with the value, it should be added and the rate has to be calculated. So this outward supply, maintaining ledgers in this model, help the organization in drilling down and identifying in which invoice that issue is possible. As I earlier mentioned, at a small SME level, maintaining individual ledgers might be helpful. If it is a large organization, yes, it would be. If it is a large organization, then that organization should automate its invoicing, which would be the ideal model. Sorry, a typo error, 8%. It is not 8%, it is 9% ledger. Actually, while copy pasting, there is a mistake. Coming back here, getting into the electronic liability register. Let me repeat. Many ledgers, when we come across, or many books of accounts when we come across while scanning, there is a ledger called as GST payable. Maybe GST payable Tamil Nadu. All the debits will be put here from the input tax credit. All the credits will be put here, and the balance will be paid. It seems it will be accounted like that. Now let me repeat it. Gone are the days. There has to be a ledger called as electronic liability register for CGST, SGST, IGST separately. From the rate-wise total, a journal entry has to be passed on the day in which return filed, so that the electronic liability register as per GST and the electronic liability register as per books of accounts matches. Similarly, whenever a payment is made, that money has to be debited to the cash ledger. It cannot go to GST payable. There is no concept. We have done away with this model of output VAT minus input VAT equal to VAT payable. No, it has to be accounted separately. All payments, whatever payments are made, all those payments to be debited with the electronic cash ledger. Similarly, all those liabilities, individual ledgers, rate-wise ledgers has to be closed, and their balances on the day in which return is about to be filed, on that day it should be transferred to the electronic liability register. And likewise, there are possibilities organization deal in special rate of tax. If they deal in special rate of tax such as 3% or 0.1% as the case may be, then a separate ledger, outward supply ledger for those purposes shall also be created. So it only going to increase the number of ledgers. I am not denying that fact, but the clarity when it comes to two things, accounting and availability of data, both will be high. However, alternatively, as I earlier highlighted, alternatively, instead of maintaining so many ledgers, alternatively, what is possible is automation at the accounting package level can be done, so that with short number of ledgers it can be maintained. Else it warrants so many individual ledgers which need to be maintained, and a transfer entry will be passed on a particular time. Having discussed about the outward supply, more specifically from the tax liability, if I have 5 registration, what should I do? Repeat the same set of ledgers. Then think only for outward supply itself, it is going to be roughly about 20 ledgers. Then we have inward supply. Then we have ITC. Individually maintaining it would be little difficult. In fact, that is the reason why predominantly organization rely on various accounting packages and try to take control through the accounting packages and want to stick and operate with that respective accounting packages model frame which has been allowed over there. Coming back here, moving forward from outward supply, getting into a most crucial area called as inward supply. On the inward supply, where there is going to be a B2B supply. There is going to be a B2B supply from both perspectives, where I'm going to entitle to claim credit from purchases as well as expenses. Similarly, there is going to be a credit on account of import of goods or ISD or a reclaimed ITC. In all these situations, how? Many times, many organizations have IGST, input IGST, input CGST, input SGST. If I have a standalone GSTN, if they have let's say multiple GSTN, input CGST hyphen Andhra Pradesh, input GST hyphen TS Telangana state, input IGST, CGST, SGST, 3 ledgers. There are few challenges. If we automate the accounting of inward supplies and go by a particular purchase voucher model, where we will fill the value of inward supply automatically after selecting the rate, automatically the GST is going to be calculated and posted in the ledger, then that model is little different. Many times it won't happen like that, where manually rates are, the IGST amounts are fed. And generally at that level, generally at a little lower data entry level, for them, the instruction is see the bill, take the credit. Many times, I also agree at a lower end accounting level person, instructing him about 17.5, instructing him about the eligibility to claim credit, all are going to be challenging. Now, in those circumstances, plus with the new restrictions that are around availment of ITC on account of section 16.2, read along with rule 36.4, claiming this ITC is going to be a little challenging task, for which one model is again having a rate-wise ledgers. Why should I have a rate-wise ledger? To overcome a excess ITC availment, where always a cross verification, an internal cross verification is possible. Absolutely, an internal cross verification is possible. And when it comes to this accounting model, if it is a rate wise and nature wise ITC is available, it becomes a little helpful. Data entry errors can be avoided. At no point in time, CGST can be 15,342 and SGST can be 16,432, where at any point in time, it has to be same. Exceptionally, it will be different. Let me repeat. Exceptionally, it will be different. But prima facie, on a monthly level, when we see, it would not have differences. Why this importance? One, availment of credit. And invoice level, ITC has to be accounted. Now, one of the popular model that is followed is ITC input. In whenever ITC entry is accounted, purchases to input CGST and input SGST. For purchases also same, expenses also same. I do agree. Currently, when data is being pulled for various other purposes, maybe for a purpose of audit under GST, or for the purpose of inspection, investigation, whatever be it, for various other purposes, when data being extracted, it becomes highly difficult. What is the rate of tax and whether the correct rate of tax is obtained or not? Or organizations either outside their accounting packages, they have to maintain an inward supply register. They have to maintain an inward supply register, which is mandated under section 35. That register they have to maintain outside the books, and a mere accounting entry is done here. In other words, there is a possibility, before discussing other aspects associated with it, there is a possibility that rate wise, if a ledger is maintained, I do agree, little voluminous, but error-free model is possible. Now, whatever credit, whenever an accounting entry comes in, the person has to see if it is IGST 5%, he will debit the IGST 5%. If it is 12, he'll debit 12. Again, 18, 28, as the case may be. End of the month, let me repeat, end of the month, entire credit will be transferred to a receivable ledger, ITC receivable ledger, again maintained under IGST, CGST, SGST. Now, why I am introducing this in-between ledger is, what is claimed as credit under the electronic credit ledger is different from what is accounted in the books of accounts. Many times, my experience is, what is accounted in the books of account, that ITC number, and what is claimed, taken, ITC taken or claimed in the form GSTR3B, both are different. The connector for both can be ITC receivable ledger. In this, what is the advantage? In this, what is the advantage? If we say, I'll take up one or two instances, leave it a rate-wise accounting. If warranted can be done. No, my accounting package will take care. Then again, we will land up at input CGST, input SGST, and input IGST. Now, in case if it is going to be available, this CGST, SGST, and IGST entries are transferred to ITC receivable. I would have 120 invoices. Of this 120 invoices, only 100 invoices is reflected in my 2A. Invariably, I am entitled to claim credit of this 100 invoices plus 10% of what is appearing in 2A, a provisional credit. In my humble view, I do agree. I might be criticized for this view. With accepting that criticism, if you ask me, it is ideal not to use this 10%. If you personally ask me, not to use this 10% because it is going to create a lot of challenge for the professional who is going to work on these assignments. At a later date, be it at GST, even for the organization, reconciliation will not be easy unless otherwise a very serious, documentary evidences are maintained. Entire 120 bills, ₹1,20,000 will be debited to ITC receivable ledger. On the date of filing return, as only 1 lakh is appearing in 3B, or only 1 lakh credit is claimed, only to the extent of 1 lakh ITC receivable ledger will be credited and electronic credit ledger will be debited. Later, electronic credit ledger will be settled off with liability register so that what is there in the GST portal and what is there in the books of accounts matches. Plus information to the management that still so much credit is pending, which means either it is an ineligible credit or an invoice is not reflected or entry subsequently need to be claimed. Enough information will be left in the system and no need. And many times invoices would have been missed to be accounted. Not every organization, a few organizations allow entry to be passed subsequently, and when a whole book is tallied, suddenly 5 months before one entry will be passed. Of course, it is highly discouraged. It should not be allowed. But point here is missed out, they pass. Now my suggestion here is every month it should be transferred to a receivable ledger, and from that receivable ledger it has to be adjusted at the time of filing the return. Now at the time of filing the return to the extent of ITC claimed in the 3B. So my 3B credit and electronic credit ledger amount shall match. This is a discussion only on B2B invoices. I am yet to make on import of goods, ISD credit. Same model to be followed. And when entire credit comes to electronic credit ledger, my 3B numbers will be there in the books. And at a later point in time, if the organization has a sizable organization who deal about 500, 600 crores of turnover, reconciling them will not be difficult. Let me repeat. 500 crores ITC reconciliation is a nightmare. That too, after introduction of Rule 36(4), it's seriously a nightmare. It will not be a nightmare where the books and the return will match on. Even assuming, though I don't endorse this view, even assuming somebody claims that 10%, they can do a provisional entry between ITC receivable ledger and electronic credit ledger. which leaves a trail in the system that subsequently, if the transaction reflected, subsequently the 20,000 rupees is reflected, I am allowed to claim only the difference portion, not the entire portion, because there is a possibility of duplication of credit. There is a possibility in going with this 10%, there is a high possibility of duplication of credit. So these are the little advantage on opting this method. Coming back to our original discussions associated with it, in case of accounting of B2B inward supplies, where B2B inward supplies, again, yet another recommendation is purchases is handled by a separate forms of ledger or either a purchase voucher, which is there, which takes care of it, and that takes care of the purchase accounting. Not like the erstwhile regime, only on purchases input tax credit is eligible. Today I am eligible on variety of transaction, if possible. And if the accounting package permits, maybe a separate journals can be used by the organization. Purchases plus a special journal for expenses on which ITC claimed. Not on every expenses someone is going to claim ITC. There are going to be thousands of expenses. Maybe of those 1,000 expenses, 100 expenses they will claim ITC. For those expenses alone, a special type of journal, if it is used tomorrow, extracting data from the same accounting package for either filing returns or for annual return compliances becomes easier. Similarly, in case of import of goods, if it is an import of goods, the party is going to give, no doubt, the party is going to give a import invoice that is going to get accounted based or relied on bill of entry. The IGST claim is made at that time. No doubt, if that is going to be, that ITC is not a normal journal entry used. Again, for accounting of those bill of entry, some organization account it along with the import invoice. Some organization has a practice, import invoice will speak only what is payable to the importer and all those taxes paid, be it CVD, be it BCD, be it social welfare surcharge, be it IGST, be it GST compensation cess, paid through their bank to the customs department will come through a bank entry. Straight away a bank entry will go and hit. Instead that a ledger for the purpose of import of goods can be created. And to the extent of IGST paid, it can be credited there. Ideal is rate wise. Let me repeat, ideal is rate wise. Accessible value of bill of entry may be captured because tomorrow for table number 14, I do agree, today it is optional. Table number 14, data entry can be captured, followed by a special journal voucher can be used for import of goods, where apart from accounting of import, leaving accounting of import, only that BCD and social welfare surcharge will be treated as a cost to that organization. Rest all can be routed through a separate ledger. One more advantage, whenever there is an import of goods, a test for ocean freight can also be made. Not every import of goods warrant ocean freight, but a test can be made. These are all within the system, within the monthly activity. If the reviewer sees an import of goods, instantly it will strike to him what will happen to ocean freight. So for those purposes, again, it would be better wherein which some basic information are captured and introduced as a special journal. Accounting of ISDs, if it is a separate books of accounts by itself, then let me repeat, it's absolutely easy. All those credit will be hitted in the separate ledger, and all those outward transfer will be done. However, if it is a centralized accounting, and there they have the accounting of ISD, a meticulous activity of taking credit at the ISD and distribution of credit to the various 4-5 GSTN within the state has to be done more specifically, where it should not go to a input CGST, SGST, IGST, where it will be a credit claimed by ISD as IGST, CGST, and SGST. Post claim, they are transferred to the same GSTN state. It will go as respective credits. To the other GSTN state, it will go as IGST credit. What is as per GSTR 6, same can be reflected in the books of accounts. Many times, with at least what we saw, debit, credit under same ledger. Today it is good from an accounting perspective. Tomorrow, for various inspections, audit, this, that, reporting purposes, it will have its challenges associated with it. Coming back here, getting into the aspects relating to accounting of this uh, ITC. One of the aspect is reclaimed ITC. Again, in my view, reclaimed ITC will also be helpful in this model, and be it a ITC claimed last year, ITC claimed in subsequent year, this year ITC claimed in next year, for all this, ITC receivable method of accounting would help in a great way, where whatever credit which need to be reversed, let me repeat, which need to be reversed or reduced, that can be removed from the electronic credit ledger and transferred to ITC receivable. For example, ITC was claimed by a supplier 1 lakh rupees in a month. 180 days pass by, and for various reasons, COVID pressure, other pressures of business, they failed to make payment to the supplier. End of the day, 181st day or subsequent month return, such ITC which is there should be added to the output tax liability, or in other words, it has to be reversed. The respective person has reversed the ITC in his 3B, let's assume, or by using DRC 03, he has reversed his ITC. Technically, what happens? The electronic credit ledger in the portal, it gets debited, and the money is available. At that moment, that reclaimed ITC, which is reversed now, will be transferred back to ITC receivable. When money is pending behind the ITC receivable and there is a journal entry which has been passed by, at any point in time, someone can refer. Very interesting to note, as explained in section 16.2, second proviso, read along with the rule, there is no time limit to reclaim this ITC. I can, whenever I make him payment, I made him payment in the next year, once things are settled right. At that time, can I reclaim the ITC? Yes. But where my book will show? My book cannot show in input IGST. My book cannot show in input CGST. I know organization overall keeping that amount in pending in input CGST. Every month, that respective input ledger should get closed. It should be parked in ITC receivable or some other name as receivable, as ITC to be reclaimed. I call here as ITC receivable as for all my adjustment purposes. Tomorrow I will have. In other words, in the VAT regime, we had a ITC adjustment account. I'm trying to give the color of that account in the same way. My money would be pending there. It would be hinting me I am entitled to claim credit, and I subsequently claim. End of the year, few invoices received. Maybe by April 20th, I have closed my books, filed my return. Post April 20th also, 31st March invoices keep on coming. Of course, I will make necessary provisions. In spite of that, 2-3 big invoices landed up, or which was received, missed to be accounted from the accounts team challenging environment. Something has missed. It got accounted at the year end. Better to park those credit in the ITC receivable. And as per law, I have time limit to claim it till next year, September. Next year, May month return, I will claim. Currently, I will park in ITC receivable. Next year, May month return, I will move the credit by passing a journal entry from ITC receivable to electronic credit ledger. At that time, my respective data would match. Let me pick. And this will throw a lot of understanding for the purpose of reconciliation. When I reconcile my table number 12 in GSTR 9C, when I reconcile my table number 14 in GSTR 9C, I would be able to spot on this is the credit, previous year credit claimed subsequently. And I could able to close that table without even any differences. All this is certainly possible in case if it is maintained in this way. These are some of the models which need to be opted for a better claim of ITC. No doubt, if there are special rate of tax which are available for those organizations, then for the respective states, it has to be maintained. I stopped here with 2 different states accounting. My intention is just to highlight that it can be scaled to as many numbers, but for point here for a discussion is it can be scaled to too many numbers, but if more number of registrations are there in the same model, organization which has about more than 16 registrations is meticulously following in the same model. But the only thing is they have originally created individual ledgers. At a later point in time, they thought that is little tedious, marking missing here and there happens. To avoid that, they automated the calculation part alone, so that at any point in time they can retrieve the data with the respective rate of tax. And to that extent, if human intervention is getting reduced, the availability of data is better in the respective accounting package. And at the month end, just a pull out of information from there will help me in filing or proceeding with the respective GST returns. Filing of better GST returns. Coming back here, getting into refund claims. Again, some organizations who are involved in exports. Before 1 minute, 1 minute. In RCM. That's what I thought. RCM, after that only refund I planned. When it comes to accounting of RCM, a very big challenging task is accounting RCM. Many times I saw entry will be RCM payable to respective bank or whatever be it. Now, a RCM liability, when it is getting created, when an RCM liability is getting created, at that moment itself, the eligibility to claim the ITC on RCM can also be accounted by the respective organization. The organization, at the time in which they create the liability, they can plan for a eligibility to ITC or it is going to go as a cost. Of course, if it is directly related, let me repeat, if the organization deal only with taxable supply, then this is not a very great task. But if an organization deal with taxable and exempted supply, and the RCM that is consumed is both used for taxable supply as well as exempted supply, on those circumstances, yes, little challenging, but nevertheless, whenever input tax credit of RCM is there, there is a RCM liability. That RCM liability will be accounted, paid, and then subsequently ITC is claimed. Two school of thoughts. ITC on RCM can be claimed in the same month. ITC on RCM can be claimed only in the subsequent month. Okay. Both school of thought was originally endorsed by the CBIC through various tweets. But if you ask me personally, I subscribe to a school of thought that RCM credit can be claimed in the same month. I would recommend you to read through a definition under section 2 of CGST Act called as input tax, which refers as credit of CGST, SGST, IGST, UTGST, and RCM payable. It refers to a credit as RCM payable and not RCM paid. Again, I am still reminded of the fact we have a clear interpretation of the word paid would include payable or otherwise from the income tax perspective and all that. But yet another point to be noted today is today's system controls the moment if I say a RCM liability, it can be settled only through cash. It cannot be settled through my credit liabilities. When that control is inherent in the return level by the government on the GST portal, then there is no prohibition for me to claim credit in the same month. If that be the situation, those credit entries will be passed in the respective heads based on the rate of tax if they want to maintain at separate rate of tax, and the RCM payable will be credited. Later at a point in time, the respective bank payment would be debited to the electronic cash ledger. That's not a credit ledger, electronic cash ledger for payment, and from the RCM ITC ledger, credit should be transferred to the electronic credit ledger. Then only an organization will know from its books of account whether for this RCM have I availed credit or not. Otherwise, it would be difficult. There is an advocate fee. In that month, they paid the tax. They have doubts to claim credit or not. It was kept open. It has to be accounted and made available there. Then only it is possible. And as I earlier mentioned, the electronic credit ledger, whatever credits available should be settled off with the electronic liability register in the manner in which prescribed by section 49 read along with 49A, 49B and rule 88. Having brought all these together, which means I need to ensure I exhaust my ITC of IGST and then only I use the CGST and SGST. If I have huge excess IGST, I can set off in any order that all entries will be made here itself. In other words, the way in which entry is accounted would replica the return for this purpose. Now, in case of all this aspects, individualized ledgers to be maintained. I do agree. Sometimes codes warranted, codes can be used, or all those other aspects can be used for the purpose of better accounting and tracking purposes. Today, to the extent Form GSTR 9 data is as this, the RCM which is paid by the supplier under inward supply on which tax is payable, for that RCM, whether it is for a registered person or unregistered person. Let me repeat. Maybe today certain data may be optionalized. Reporting of certain tables may be optional, but I think in the near future or for a better review, all this data is relevant. Simply seeing a number in GSTR 9, 49 lakh 43,462, 49 lakh 43,462, 5 lakh 98,582. Simply seeing a number is different from a number which is debited in table 14, expense wise, tax so much taxes. When that breakup is given, that gives a better comfort level for a reviewer who is reviewing the data. To extract all this, the inward supply register has to be maintained well, or the book itself should contain ledgers in the way that can be extracted. If I export the data, it will be an inward supply register for me. So I don't maintain two different activity. I just pull out my books, and the way in which I maintain the books, which is little different, where the data moves is going to get comfortable for me. Coming back here, getting into the respective payments associated with it, the electronic liability, the electronic credit ledger, ITC accumulated should be set off with the liability register. The cash ledger should be set off with liability register. What is the position here? Those numbers should also be reflected. Of course, RCM payable liability ledger, I mean that money should be transferred to the electronic liability register. In my view, I am taking up individual ledgers, transferring it to ITC receivable wherever credit is eligible. From there, to the extent of 3B, it is transferred to the electronic credit ledger. Else it is kept pending there itself. So it's a reminder to me, either it contains a reclaimed ITC or it contains ITC which is sent back by the GST department, or I'll come to that, at least sent back. It's not sent back. ITC, reclaimed ITC, or it is a ITC which is pending, or it is a ITC which comes in lots so that I can adjust them or claim them subsequently. I would be having some kind of data reminding me what is my balance credit which need to be availed. For that purposes, this model of accounting would be of great help, which is also originally recommended by the institute on the service tax regime itself. Coming back here, getting into the GST ledger's perspective from a refund claim. When a GST refund claim is concerned, GST refund claiming process is concerned, all those ITC that are accumulated by the organization would be accounted by them in the respective ledgers of CGST, SGST, or IGST, and from there it should have been transferred. It should have been transferred to the electronic credit ledger. Whenever a refund application is filed from the electronic credit ledger, a particular ledger maintained in the books of account, from that ledger, money need to be transferred to GST refund receivable. It's a proof that at the book level, that money for which application is made. When a RFD-01 is filed and the officer has accepted the application, immediately the electronic credit ledger in the portal would get debited. At that time, from the electronic credit ledger, money need to be transferred. In fact, if you've been following over the last 50-60 minutes or so, I am trying to bring back the electronic credit ledger, cash ledger, and liability register in the books of account maintained by the company. I don't want a input ledger. I don't want a GST payable ledger where all the output will get credited. And I don't want a transfer of input ledger to here and a cash payment here. This model would work for a tiny micro organization. Maybe they have a 2A, 3B issue. Maybe if they have certain other issues, certain other reclaimed ITC, missed out ITC, section 16(4) subsequent year claims, refund, routing all the transaction to a simple 3 ledgers model won't work out. Coming back here, if an organization has made an application for refund, referring the respective refund application, ITC from the electronic credit ledger can be transferred to the GST refund receivable ledger. This gives a confirmation so much credit is transferred for that, a better data for the viewer to see the books of accounts and decide I can set off only so much during the year, so much during the month, or what are the refund application yet to be filed, whether it would be adequate or otherwise. Again, once the refund is approved and the money is credited into the bank account, the GST refund receivable ledger will get scored off. In case if there are any short differences because of wrong claim, excess claim, XYZ, from there it can be charged off to the P&L. Or in case if it is ineligible and credit is sent back through RFD-03 by the officer to the electronic cash ledger, electronic credit ledger, then to that extent it can also be transferred. So moving this, many times the organization have a practice. The organization, at least to what extent I have seen interacted, the inputs will be transferred to electronic credit ledger where CGST also will be there, SGST also will be there, IGST also will be there. Very tough, very tough. Entire money received from bank will also be credited. Which month refund, till which month refund is filed, whether you have received the refund or not, one asset will be there accumulating. Whether that asset is a really realizable asset or not realizable, to have a better understanding there. The idea is once a refund application is filed, it can be moved. Now, both positives and downsides we have discussed when it comes to this refund application. Getting into accounting from the perspective of both purchase of capital goods and a sale of capital goods. At a purchase of a capital goods, I don't find any greater challenge, but for using, instead of a purchase voucher, regular purchase voucher, a special voucher type can be used so that to locate it. Very recently, we have received, for one of the client has received a notice who shared to us from the records available with this office. It seems you have claimed excess ITC as compared to your industry. Let me repeat. queries comes like this: excess ITC. When it comes to this excess ITC, how it is possible? They are comparing with the industry and they are coming up with the notices like this. Now, when we go back and see, nothing great. Over the last 1 year, his purchase of capital goods has increased 2 to 3 times. Absolutely nothing great beyond it. All that we need to provide him is with this basic information. If a special type voucher is used, it would be easy to locate from the ITC ledger maintained by the organization itself that this is a credit. Some of the ERP allows a special marking for it so that it can be retrieved at a point later. But at some of the accounting packages level, this facility is not available. So the accounting packages allows to create n number of voucher types. So a special voucher type can be created, and it is a practice that need to be imbibed to the organization, that in case of capital goods they have to use this special voucher type only, followed by this ITC which has been claimed. It's possible under capital goods. Sometime assets will come in lot basis, common in case of boilers or heat exchangers, where the first lot, second lot, and the last lot of the goods will come. Now, no doubt, if we go back to section 16.2, I am entitled to claim credit only on receipt of last lot. Until such time, I would be accounting as CWIP. I'm not denying. I would be accounting as a capital work in progress. But at this end, I want to claim ITC. After receipt of last lot, I am entitled to claim ITC. I should not pass this entry in the credit ledger, which is maintained in the books of accounts. It should be parked under receivable ledger, and I should be aware of the fact. And if in case the lots are divided into 2 different financial year, maintaining an in-between ledger, either called as ITC adjustment account or called as ITC receivable account, or by whatever name called, it would be of help. So coming back here, moving forward from this, in case of sale of capital goods. Sale of capital goods is a usual fact that happens in business post usage. But if a capital goods is used, section 18 subsection 6 triggers a proportionate credit in excess of the depreciable percentage of ITC in case that is there, that should also be reversed. In other words, the sale value of the capital goods on that GST payable, or the 5% per quarter of use, what is used, that will be allowed. What is not used, the unutilized ITC on the capital goods, those portion, this two amount of this two, whichever is higher, that need to be reversed or that need to be paid, as the case may be. Now, many times the regular sale voucher itself is used by the organization. Maybe that can be discouraged. A special voucher can be used. If they even use the regular sale voucher as a regular series of invoice, the respective sales ledger to be credited and transferred to the sale of asset for its accounting and other aspects. Why? If this is available, let me repeat it. Many times we come across a company's profit and loss account is picked up. On picking up the company's profit and loss account, selecting the deleted portion, which is circled by the officer, and a tax at the rate of 18% has been demanded. the deleted portion on a block presentation, gross block, net block, and WDV presentation. The deletion over there includes my reserve. Of course, the situation is different when somebody looks an income tax fixed asset schedule. But if it is a gross block fixed asset schedule, then it should not happen like this. A ledger specifically maintain either sale of capital goods, if permits, they can maintain, or in the regular ledger itself, it can be done, and an entry need to be reversed. That leaves at the ledger itself a trial, that this asset is taken away. Even otherwise, we can review the fixed asset schedule and identify this transaction. But for someone to decide at this level, because when it comes to this section 18.6 used goods sale, many times if a transaction is business to business, the other person is interested in paying excess GST also because of the impact of 18.6. That can be identified if entries are maintained in this particular model. But for it, nothing great here. Accounting entry has to be specifically done for sale of assets, and the compliance associated with section 18.6 should also be captured. Coming back to the inter-transfer or inter-unit transfer, where if the inter-unit transfer is going to be within the same GSTN from one branch to another branch, that is little outside from the accounting perspectives, or even otherwise a simple delivery challan can be used, or a stock transfer, non-taxable stock transfer challan can be used, and transfers can happen. However, if both the units in the same state are registered, then it is mandated that the transaction between these two distinct persons would be treated as a deemed supply as far as Schedule 1 is concerned, for which a rate-wise outward supply may be maintained from the first GSTN to the other GSTN, if it is a centralized book or a single book, as the case may be. If it is separate books, GSTN wise, if they maintain, then in the AP1 Andhra Pradesh 1 GSTN book, AP2 ledgers individually will be maintained. Similarly, in the Andhra Pradesh 2 books, a separate stock receipt ledger will be maintained. Or if it is a centralized tally, let this centralized books of accounts, then a ledger has to be maintained. And at the end of the tax period or end of the year, any case there is going to be a contra, both the ledgers will get closed, but leaves a lot amount of data in the system. Same in the case of cross charge, where it could be a cross charge between a branch to another branch. Yes, a separate ledger, like how a separate ledger for stock transfer and stock receipt is going to be maintained. In the same way, a cross charge should also be maintained. But let me repeat it, at the end of the day, as an organization, it is knocked off. But as a standalone GSTN, it is eligible. When we discuss so much about the accounting, a fundamental query can be raised. Do I need to maintain books as each of my GST registration wise? My answer would be a very simple yes. When we carefully get into section 35, section 35 mandates a person to maintain a book's GST invoice, respective GST invoice. If at least the GST invoice data is not even available, they may plan, they may have ledgers for the purpose of accounting level, extracting information level at this level. Whatever liability that are going to be there from the individual stock ledger, all will be transferred. Let me repeat. For a, if for an organization, various transactions are there, various. One minute. Yes. If for an organization, if various transactions are there, then all these transaction has to be brought in under a same tax liability ledger. In other words, output IGST ledger rate wise of that GSTN, output CGST ledger rate wise of that GSTN, output SGST ledger rate wise of that GSTN, RCM payable nature wise, rate wise of that GSTN, stock transfers within the state, outside the state of the respective GSTN will be there, followed by all those other tax liabilities will also be there. The entire set will lead to a tax liability ledger. From all this will get closed, including maybe we can put cross charge. Instead of stock transfer name, use the word cross charge. That's all. Cross charge, intra. Cross charge, inter. In intra possible, yes. Both two different registrations, and for two different registration, there are common activities provided. There would be a possibility of supply between this person to that person, or by the third person, common person. There would be a possibility of cross charge. In case of cross charge, accounting of those should also be made up. So stock transfer is ideal. I mean, it is little easy for us to appreciate stock transfer and stock receipt. Similarly, a cross charge or a expense distribution and an expense receipt at the other end would get matched. From the output tax liability, entire liability to be transferred to the electronic liability register. From the input CGST, the eligible credit claimed in 3B only to that extent will be transferred to electronic cash, electronic credit ledger. Whatever money paid will be debited to the electronic cash ledger. Both the cash ledger and the credit ledger will be used to set off the liability. In this model, if it is accounted, the GSTN portal and the books of accounts would match. Let me repeat, it's tough. But if it is maintained, let me repeat, 3 months down the line, the organization will cherish a lot of data that is available with them for their analysis. And lot many things can be automated, or the system sometimes can be automated in this model. There are organizations who automate certain things in this model also. Getting into the crucial areas, debit notes, credit notes. As far as both debit note and credit note is concerned, it is a GST debit note and a GST credit note issued under section 34. I'm not talking of a financial debit note and a financial credit note. No. I'm parking that discussion. I'm initiating a discussion only under section 34. A GST debit note and a GST credit note. A debit note which will increase the value of supply. A credit note, section 34 credit note, which is going to reduce the value of supply. Having said that, a debit note can be issued for certain identified purposes. An increase in value or the rate of taxes to be increased, it's short collected for that purposes. A credit note similarly, wrongly charged excess value, wrongly charged excess rate of tax, or it's a goods which are all returned, or a non-provision of service or deficiency in service, preferably a deficiency in service. For stated reason, credit note can be issued, plus in case of section 15.3, section 15.3, a post supply discount. A post supply discount is possible, where a credit note can be issued for a post supply discount. We have reasons for all these credit notes, but one moment. When it comes to the credit note, the accountability of credit note, many times, many organization does not have enough data. Credit note will be there, it will be straight away adjusted in the sales broader number. For what? Which credit note return, followed by credit note will be issued in a different month. Let me repeat, credit note will be issued in a different month. After acceptance, discussion, negotiation, will be reported in the GST in a different month. And let me repeat it, but it will be accounted in the books on the day in which it is issued. Entire GST ledgers will not match. In other words, credit note is issued in the month of October 2019, but it got reflected in the 3B and adjusted in the 3B on May 2020. Is it well within the time limit for reporting? Yes, it is well within the time limit. In those circumstances, it is not a credit note reported in May. It is not a credit note issued in May 2020. It is a credit note reported in May 2020. In those circumstances, the credit note will be accounted. It will get reduced, but the tax should not go to ITC receivable, should not go to output account, electronic credit ledger or electronic liability register. No, it should go to ITC adjustment account. It should be available in the ITC adjustment account, and at a later point in time, it has to be transferred on the day when it is reported. Let me repeat, the 3B and the accounting has to go hand in hand. No, it was accounting entry missed. I do agree. I am not denying a credit note. Can I not, in the month of May itself, I have reduced my output liability, my electronic credit liability register in the books, or my output IGST liability or CGST, SGST liability based on the credit note. In that month itself, I reduced. In that month, it got reduced in the books of accounts. Whereas in the GSTR 3B, it got reduced only subsequently. Maybe if a better practice is followed from the GST credit note, if it is transferred to a particular adjustment ledger, and afterwards if it is transferred to the liability register, maybe a set off would be a better, because the day in which it is getting reported in the 3B, on that day, yes, adjustment. In this model, if it is being maintained, all of us will have a clarity. We can instantly see, and even this month transaction, next month transaction, omitted transaction, all can be possible. I'm only talking of exceptional transaction. I'm not talking of ordinary transaction at all. It's an exceptional transaction. Not every credit notes get missed. Kindly understand. I agree with you. My suggestion is transfer it to ITC adjustment account. Same month adjusted, send it back to electronic liability register. If not adjusted, we will have a trial left in the books. I am a person, by seeing the books, I should be able to comfortably close everything. It requires, I mean, let me repeat, it's easy to share. It's easy to share. When it comes to accounting, imbibing fellows, our fellows will miss. But okay, 4 times you'll miss, 5 times you'll miss. 6th time you'll say, is these ledgers are closed? Is your ITC receivable ledger is closed? Is your ITC adjustment ledger is closed? Is your next I'll come TDS receivable ledger is closed? Is your TCS receivable GST TDS ledger is closed? GST TCS ledger is closed. Now it's an instruction. The fellow from the accounts should ensure these tick are done, and then only he can go for preparation of his 3B. Before that, he should not go. Before closing the month-end entries, he should not do. Or there should be an automation journal, absolute automation journal. Is it possible? Yes, it's possible with difficulties. Though it is said automation, a manual intervention is required. Now, any case, coming back here, concluding on the credit notes related matter. Same credit note, debit note. Debit note, same. It should go to the adjustment account and later. Whenever there is an amendment in the books, if it is reported rightly, then no issues. Only on the return, then it's a return related adjustment, nothing to do with the books. But in the books itself, if it is reported erroneously, then it warrants a debit note. An invoice is reported instead of 10,000 rupees. That is what they originally agreed and quoted. But erroneously 1,000 rupees was billed. Later they realized they issued a debit note by increasing the value. Debit note will be, no doubt, will be, the debit note will be accounted, and the effect of it will come to ITC adjustment account and then transfer to electronic liability register, which will inflate the value. Similarly, if it is a credit note, afterwards it will reduce the value. So that tracking is possible. A plain entry of credit note to output tax. Debit note to output tax at a later point in time. Let me repeat, at a later point in time, very difficult, very difficult. As long as, let me repeat, as long as whatever credit note reported are reported in the same month, no problem, absolutely no problem. It will go smooth. A credit note reported in this month in the books of accounts, whereas in the return reported 5 months, 6 months later, at that time alone, those organizations will have challenges. Coming back here, getting into certain discussions on TDS credit and TCS credit under GST, under GST. A separate GST TDS and GST TCS ledger has to be created. I don't think so it warrants a rate wise, but if it is multi-state operation, every state separate ledgers to be maintained. And when it is accepted in the common portal, on that day, a money need to be transferred from GST TDS account to electronic cash ledger and GST TCS account to electronic cash ledger. Let me repeat. Until that day, because what happens is, the moment we get the payment from a government organization, public sector company or government department, we account GST TDS, and very invariably we credit the GST payable account or some other account we debit the respective account, but it never happens. Though the government department has paid this fellow, 3 months later only he reports the transaction. But month 1, the supplier has discharged the tax, paid. Month 2 only government pays. At that time, they give an instruction. With that instruction, we could able to see 1 lakh as GST TDS. But that month 1 transaction was reported by the government. Further, on month 3, I can claim the credit only in the month 3. Then on month 3, from my TDS receivable ledger, one entry need to be passed through electronic cash ledger. And from there, it will set off my liability register. Let me repeat. These are all my views when it comes to accounting of this TDS and TCS, it would be a great help. I do agree. Same month came. I deal with ECOs. All e-commerce operators are all good fellows. They ensure the money is credited into my account on it. I claim. Let me repeat it. Claim the credit. Whenever the payment is received, at that time itself, entry will be passed in the respective ledger. From there, it can be transferred, whichever ledger it is transferred. But in 1 month, if it misses, then there will be differences. To that, certain modalities can be followed. All credit, let it get received in one place. TCS receivable, TDS receivable under GST, and one ledger. Let it get accumulated to the extent claimed, that is accepted in the GST portal. To that extent, let it get transferred to the cash ledger in the books, which will further be used for electronic liabilities. I mean, which will be further used for your liability payment. In that way, this modality can be done. These are all my thoughts relating to. These are all my thoughts relating to accounting of TDS, TCS, and debit note, credit note. Within the given time frame, I tried my best to share a few thoughts on the accounting. I'm not sure how far this is beneficial to a lot of us, because we all have a different views when it comes to its accounting perspective and other aspects. But if in this way, if it is being maintained, extraction of data, availability of lot of information to the organization would be great. I thank the organizers. I thank the GST and Indirect Tax Committee, in specific the Vijayawada branch, and all the members for effective and patient listening. If I may be permitted to take up questions, yes, I would take it. Thank you all for effective and patient listening. Thank you.
Thank you, sir. Thank you very much for the wonderful session on the accounts part. Though it is, as you said, it is very difficult to deal with the basic funda, because accounting entries is a personal domain. Everybody is having their own perception and of dealing the things. But still, whatever the things that are shared by you is really, really excellent. If you are willing to share this PPT to the
Yeah, I'll share it, sir. I'll make it
lot
right.
of the delegates are asking for the same, and definitely you can share it to the branch, so that it will be useful to each and every person who are going to utilize the same. Thank you, Varandal, for the excellent deliberation on these things. Thanks to GST committee once again for giving us an opportunity to be part in the knowledge dissemination of the in the GST era. Thank you, Rajendra Kumar sir, for giving us the opportunity. Thank you for providing excellent faculty like Ganesh Prabhu sir. Thank you very much, sir. If there are any queries, I think, sir, if there are time permits, you can take up in the chat box, sir. There are some questions are being asked in the chat box, but it is very difficult because there are hundreds and members pouring the things. Sir, I think sir shared his email, so that if anyone is having some query or something like that, you can write it to the branch. We can direct it to the Ganesh Prabhu sir, and definitely he will get a reply to you in the due course of time, though not immediately. Thank you, sir. Thank you very much for the excellent deliberation. Thank you one and all for your patient listening and excellent participation. You are the wonderful participants. You maintained the decorum of the branch, decorum of the ICAI by simply muting yourself, and whatever the inconvenience is there, just putting in the chat box. Really, really great, sir. Tomorrow by sharp 6 o'clock, we'll meet you again with Shankar Narayan sir on the reconciliation part, and also how we have to generate the returns from the accounting software, and how the input ledger, tax ledger is going to be, and his perceptions. And mind you, tomorrow Rajendra Kumar sir is also going to meet you all because today is having a session with the ministers, so on the institute issue itself. So he is not available today. I request everyone to kindly be part of this program by tomorrow, sharp by 6 o'clock. Thank you, one and all.